afternoon, good morning, even good night. We hope that you and your families are all well in these unprecedented times. On behalf of Pulsar team and the WorldBank community of practice on sustainability integrated reporting, we are happy to welcome you to our 9th Pulsar webinar, entitled The Implications of Sustainability Reporting on Public Sector Accounting. The key objective of this webinar are to explore the trends driving evolution of the global sustainability standards, understand how development and implementation of sustainability reporting could affect global private and public markets and financial flows, and analyze opportunity and challenges of sustainability reporting for public sector accounting. In order to achieve these proposed objectives, today we have a very ambitious agenda and a group of renowned experts on the topic. During the organization of the event, we had to be creative in order to ensure availability of all our speakers. So for instance, we moved the country experience sessions towards the beginning of the event rather than the closing as usual. Another last minute change was asking Svetlana Klemenko to moderate the expert panel on global trends, challenges and next steps, while Fiona Stewart will still joining us during the setting the stage session. I would like to remind you that all presentation, including the translation, will be briefly available on our Pulsar and CFRR websites, while the original version in English is already available directly in Kudo platform, accessible from the right middle side of your screen. Please also feel free to post any questions you might have using your preferred language directly in our chat. Without further ado, I pass the floor to Daniel Boyce, Practice Manager for the Governance Team for East Europe and Central Asia, to share with us some opening remarks. Dan, the floor is yours.
Thank you, Dimitri. Hello, everyone. Good morning or good afternoon. I'm pleased to welcome everyone here on behalf of the Pulsar team and the World Bank generally, including our community of practice on sustainability and integrated reporting. This is our 9th Pulsar virtual workshop, which we also call the Smart Interactive Talks. Today's topic is the implications of sustainability reporting on public sector accounting, which is a relatively novel subject. It's not something that our Pulsar members are necessarily dealing with every day, but it's been gaining increased interest over the last few years. We want to thank all of you for joining today, taking time out of your schedules, and we hope you're all doing well, including your families in these difficult times. In recent years, there has been a surge in genuine commitment to sustainability and sustainable investing among the companies, investors, governmental regulators, and other stakeholders, including international development banks like the World Bank. In parallel, the climate, environmental, and social sustainability have become a central concern and a policy focus for governments and for regulators. And what we want to talk about today is how we are reacting as a profession and as professionals in adjusting to this phenomenon and building this into our own work programs. This concept of integrated reporting isn't new. It's existed for many years, maybe 20 years. I remember the discussions on environmental accounting, it was called at one time, and it's evolved, but there has been a lack of universally adopted, harmonized standards for sustainability that has been hindering the market's capacity to react at a scale across countries, across the world, that has been able to react to this new focus on environmental matters, which has resulted in a call, especially recently, for convergence and development of global corporate responsibility, global corporate sustainability reporting standards. In 2020, very recently, the IFRS Foundation conducted public consultations to assess whether it should add sustainability reporting to its core functions. It received responses that indicated strong support for the introduction of global sustainability standards, which I'm sure we'll hear more about today. At the same time, by the end of last year, a key a few key voluntary standard setters, such as the CDP, which is the Carbon Disclosure Project, Climate Disclosure Standards Board, Global Reporting Initiative, International Integrated Reporting Council, and the Sustainability Accounting Standards Board, which are all standard setting bodies, maybe taking a different angle, but all in this field of work. And this group has initiated a convergence process and issued its statement of intent to work together towards comprehensive corporate reporting. I'm sure in today's event, we're going to hear more from all of the experts, interesting details, not only on what I've mentioned, but on other angles and country experiences in the sustainability and integrated reporting agenda. So once more, I'd like to thank you and appreciate especially the speakers, but also the guests and participants for joining us today. And we hope you'll enjoy this event. We look forward to seeing you also in our next and many future Pulsar webinars. Thank you again, and back to you, Dimitri, for the rest of the proceedings.
Thank you, Dan. Now I would like to ask Svetlana Klemenko, Fiona Stewart, and Monica Kumar to share the general background on sustainability integrated reporting with us.
Thank you very much, Dmitry, and good morning to everybody. It's wonderful to be back to Pulsar events. So as regular participants of this series realize, we keep trying to bring to you not only news about what is already taking place, but what we anticipate will become the focus of your work in the coming years. And given that here we have the audience of the government accountants and financial management professionals, we would like in this segment to set the stage in such a way so that you would understand why sustainability reporting is important for your principals and how is it going to affect the work of your respective governments going forward. So as you all know, many governments are now very focused on the ways to support the sustainable and climate-friendly post-COVID economic recovery. This agenda is global. However, in the region where you are at, in Eastern Europe and Central Asia, it is particularly prominent, given that one of the key champions, European Commission, is where you are at. In the context of finding the ways to advance this agenda, the governments, your respective governments, are analyzing how they could mobilize finance, both private, public government finance, as well as finance provided by the development financing institutions, and how they could use this finance in such way as to support the investments which would produce the results that are sustainable and which would shift the economy towards the new climate-friendly sustainable model. And as part of this, so why are standards important? Sustainability standards act as a leverage to shift the way capital markets function and to direct all kind of finance, would it be private, would it be government finance, would it be the DFI finance, in certain direction, so that the capital will be priced with the consideration of how objectives which go beyond financial performance are achieved. So as you will realize in the course of this discussion, the private sector is leading the way, with the first wave of standards being global standards being focused on the corporate finance. However, there is already the dialogue, and we as the World Bank, as you know, is closely working with the government, so we are encouraging and promoting this dialogue, which is also focused on the government finance. So I will hand over the floor to Fiona, who is going to discuss specifically this dimension of how we now see this dialogue focused on the corporate sustainability standards being breached with the government finance and government standards. And then, of course, Monica Kumar, who has a long and distinguished involvement in this area. Monica has been leading the work focused on the bank's own sustainability reporting before it became the mainstream policy consideration for a number of years. So she will share with us some insights on how methodologies that have been developed in the course of the previous years could now be adopted by the markets. With this, Fiona, the floor is yours.
Thank you, Svetlana, and thank you everyone for the invitation today. So my name's Fiona Stewart. I actually sit in the finance and markets practice of the World Bank in the long-term finance team, working a lot with institutional investors. And as Dan outlined, there's huge appetite from the markets at the moment for more of this sustainable reporting, be it on climate, be it on environment, but broadly the ESG agenda it's really large, and there's a huge appetite for more and better data. As Dan outlined, many flowers have flourished as a consequence. There's many different data providers, standards popping up, definitions out there, which is having two effects, I think. One is, as Dan said, preventing some of the scale happening. The other risk is there's this idea of greenwashing, many of you will have heard of. Are we really directing capital to where it's needing? Is this really sustainable? Is this really green? So the whole push on the corporate side for these harmonized reporting is really, really welcomed by the markets, and we think could be very, very transformational, very important. Now, the role that your world plays on the government side is also, we think, extremely interesting and important. And as you will obviously all well know, there's several roles here in terms of what does the public reporting of this mean. Obviously, there's like state-owned enterprises, government-owned enterprises, SOEs, who should largely, we would expect, follow the corporate standards that are coming up. Then there's your own government reporting. Very interesting contrast, I think, here between the government and the corporate side. The corporate, to some extent, maybe you're sort of ahead to some extent in the financial reporting, but is really struggling to work out, what does this sustainability mean? What should my broader impact? What should I be reporting on? Many ways as governments, you have that already. You're used to reporting on, governments report on impact, on policy impact, etc. So there's a very interesting contrast, I think, to learn between the two worlds. I think Ian and others will probably bring this up later. But another piece that we're working on is governments as issuers. Sovereign bonds are actually the biggest part of many investors' portfolios. So there's a question again about what is the sort of sustainable reporting, what is the information that investors need from governments as an issuer, if they're investing in government securities at all. That's something we're working on to see if something like the TCFD framework for climate reporting, how could we adapt that framework to governments, in that there's a lot of information that's being put out, that governments are put out, but it's not necessarily what the market needs. So we're trying to bridge that gap, and I think that would be very important for making sure there's really a holistic approach going forward to the sustainable reporting. Just to finally to say that, as Svetlana mentioned, it's very supportive that this is a global agenda. It's a global standards that are being set. We think it's very important that they are proportional, appropriate, and can really be implemented in all contexts, including where there's less developed capital markets. And again, the governments have a very important role as these standards are being set to ensure that that's the case. And that's a role, I think, that we at the bank have that voice as well, which will be very much voicing during the process of setting the standards and then helping to implement in future. So apologies again, Dimitri, I'm so sorry. I really would love to stay for this discussion. I'm sorry I have to jump, but really looking forward to the follow-up, and great to see that this is coming in a public sector context as well as the corporate good work that's out there. Thank you.
So thank you, Fiona and Svetlana, for that fantastic summary of the landscape. I just want to check that everyone can hear me, right, Dimitri? Okay, fantastic. So having coordinated the World Bank Group sustainability reporting for the past decade, I'm here to tell you that as a community, we're missing the forest for the trees. So as you're aware, this is not a new initiative, and sustainability reporting is not a new set of disclosures. In fact, World Bank Group seed funded GRI in the early 2000s and started using the framework in 2005. I personally have been coordinating our sustainability reporting, expanding the frameworks since 2008. We even used the public sector, the guidelines from GRI way back when they were being offered. These disclosures and the request and demand for these disclosures was driven by investors keen to understand how the World Bank Group lending impacts the environment and the people. So over the years, over these past 2 decades, other reporting actors came into the field only when the gaps in disclosure were noticed, each one trying to improve the information being disclosed. CDP was not adequately fulfilling the need to understand impact of the portfolio on climate change pathways. So when we now have TCFD. Similarly, GRI, even though it caters to the most comprehensive set of stakeholders, was superseded by integrated reporting to help reporters relay how they add value by using multiple capitals, including financial, natural, people, social, intellectual capitals. And in 2016, we in the World Bank supported IIRC, and CIFA published a white paper entitled Focusing on Value Creation in the Public Sector. I'll put a link in the chat box afterwards. So this brings us to where we are today. This conversation builds from the need for creating a global, consistent reporting standard that reduces complexity in this space and allows for better comparability, similar to the financial standards. However, we don't need more of the same. Rather, the sustainability reporting community is calling for better than before. The representatives of the current sustainability reporting frameworks can find similarities in their disclosure standards, since they are pretty much all consumption-based and do not necessarily tell us if an entity is sustainable. That is, if the entity, how long an entity can continue to exist if it carries out its current strategy. Let's see an example. I'm going to share my screen quickly, and as a practitioner, I like practical examples, so I'm going to give you. I'm going to walk you through an example of how we disclose water. And if someone can tell me, you can see my slides.
We can see.
Since I cannot see you. Okay, perfect. Thank you. So here is an example from GRI. They ask total water withdrawal from all areas, right? Is it surface water, groundwater, blah, blah, blah. And then they ask total water withdrawal from all areas with water stress. Again, each one of the sources. And then they ask for the breakdown of the total water by fresh water or other water. They want to see how much you're using, recycling your water, and any other contextual information. But the contextual piece is left vague. Similarly, SASB, Sustainability Accounting Standards Board, they ask for total water withdrawn and total water consumed as a percentage of the regions in high extreme baseline water stress. And then also there is the Global Impact Investing Network. Very few people bring them on as a common standard, but these guys focus more on impact investment community. And again, it's all about water consumption. So as you can see, all these are telling is how much water is consumed, and to some degree, it does tell us a trend. It does tell us what environmental impact is happening. But there's no acknowledgement of the ceiling. That is, there are no, the ceilings that are non-negotiable and real, right? There is a limit to the amount of water you have available. But if you keep consuming or keep showing that you're reducing your water use, I still have no understanding of, are you going in the right pathway? Without knowing how much water you have left in the watershed and at the current rate of consumption, will the entity, whether it's a private sector or a public sector entity, will it be sustained for 1 year, 5 years, or 100 years? And how do you compare it to your peers? How do you compare a utility in India that's reduced its water consumption by 10% versus an entity in Poland that's reduced its water consumption by 50%? And is that good? Is that bad? We have no idea. So these metrics really do not allow us to see if an entity is able to sustain itself for the long term, right? This is what Dr. Mervyn King calls driving a car while looking in the rear view mirror. You don't really know where you're headed, and that's the biggest risk to all of us. So this conversation is very timely because we have been reporting on metrics that help us understand an entity, an SOE, or a national government's environmental social impact but it is not sustainability reporting. In order for us to know if an entity is on a sustainable path, we need to use a denominator of how much of that resource is available to you. So this image shows you the 9 planetary boundaries. So staying within those boundaries is the safe space for all humans to exist on the planet. If we go outside of those boundaries, we risk catastrophe. As you can see, we've already surpassed 4 of those boundaries. But on the water piece, under the planetary boundary, we're still safe. However, as you know, water is a very localized issue, right? So one watershed can be stressed while another is not. So how does it look if you add a denominator to your metric? So it's not just your consumption, but you add the context, how much water is available to you as an entity, whether you're in the public sector or private sector, and then talk about how sustainable you are as an entity. I'm going to stop sharing my screen now. And basically to say, there are frameworks out there that are looking at this in a much more concerted manner. For example, the UN RISD, the UN research group, it has created a 3-tiered set of metrics that include consumption, context, and transformational aspects. And they're piloting this framework with a select number of groups. And in fact, the context-based reporting applies to public sector entities even more. Compared to other sectors, public sector entities face additional reporting challenges. As both Fiona and Svetlana mentioned, public sector entities have a need to build trust with its citizens through delivery of services such as education, access to water, and to be able to disclose to their citizens how they're doing this and how many resources they're using while delivering these services. So the onus on the public sector is even more, and that's why I'm honored to participate in this forum, since it is ideally situated to demand better than before by creating a structure that takes into account the context of the reporting entity, as well as acknowledging the ecosystem limits and the social needs. This will allow for useful, comparable data that citizens and other stakeholders can use and make use of. So with that, I'm going to hand it back to Dimitri. Thank you.
Thank you, Svetlana, Fiona, and Monica. Now I would like to invite Arman Bekturova and Patrick Kubayev to present Kazakhstan and South African experience in using sustainability integrated reporting. Arman, maybe you can start. Let me know if you would like to project your presentation for you.
Okay, I will try. Firstly, if I couldn't, I will ask you.
Share the screen.
Yep. I try.
Let me do it for you. Are you there? Arman? Arman, can you hear me? Patrick, it looks like Arman is frozen. Maybe we can start with you while Arman is reconnecting.
Thank you, Dimitri, and good morning, good afternoon, Jambo to all of you. It's also an honor to be invited to participate in this event to share the experiences from South Africa and Africa at large. I'm representing also my group from Sustainability and Integrated Reporting Community of Practice in the WorldBank. And within the few minutes that have been allocated to me, I'm mainly going to share 5 lessons from both South Africa and the African region. And I think these lessons can end up helping any other country, especially the countries from PULSA who may want to benefit from the journey that we've experienced in South Africa and Africa at large. And before I start, just want Dimitri, if you can let me know whether you can see my slides, please.
Yes, we can see your slide. Arman, we started with Patrick, and then we will continue with you. I saw you just reconnected. Go ahead, Patrick.
See? Fine, good, perfect. Sorry, thank you. So South Africa is one of the countries.
We can't hear you, Patrick. Arman, please mute. You're muted, Patrick. Can you unmute?
Net connection is not stable. Что такое?
I still see the sign of that you are muted. Robert, can you help Patrick? Patrick, could you refresh as well your screen? It's F5. We can't hear you. Arman, are you here? Arman, can you hear us? Arman, can you hear us?
Dimitri, can you hear me?
Yes, we can hear you now, Patrick.
Not sure what was happening. Let me just tell me whether you can see my. Can you see my slides?
Yes, go ahead.
Fine. Sorry, yeah, I apologize once again. I'm not sure what happened there. But just to start, I said South Africa is one of the countries which have been implementing sustainability reporting and integrated reporting for a long period of time. So I'm going to use South Africa and Africa to share 5 lessons. The first one that would end up benefiting the countries represented and participating in this event. The first one is integrating the reform in the corporate governance agenda. So in South Africa, the corporate governance guideline, principles, and practices are incorporated in what we call King Report. The first King Report was issued in 1994, the apartheid in South Africa, or the independence in South Africa, and provided guidelines on how the boards should really operate. And then in 2002, there was the Earth Summit that happened in South Africa. And at that time, the King Report under Professor Marvin realized that there is need not only to focus on the financial side, but to increasingly include the element on the environment and the society. Because there was no way that a company could continue running only focusing on financial, because it had detriment on the environment and society. So the whole concept of sustainability reporting was brought on board to bring in those 3 elements: environment, society, and financial. And then in 2010, obviously there was clear realizations that within South Africa, most of the listed companies started preparing sustainability report in one house and a financial report in another house. And those reports became very complex. The story was lost. It was not understandable. And in 2010, that's when the King 3, the third version of King Report was issued, and it introduced what's called an integrated report. The whole notion of the integrated report is integrating both the financial and the non-financial aspect, or the sustainability report, to tell the story of the company. And this story included the governance aspect, the strategy, the risk, and the overall performance of the institutions. So again, that was well included in the King 3, and then the King 4 back in 2016, which is a revision of the code, brought in more elements, realizing that the world was shifting. The companies were shifting, not just focusing on shareholders, but also the stakeholders. They were shifting to integrate both the financial and the non-financial information. And most importantly, there was also element of the thinking. The boards needed to think in an integrated way on how they were using their capitals to create value and on a long-term basis. So that element of code of governance, corporate of governance, becomes important. And from King 2 to King 4, they are also applicable, not just in the private sector, but also in the public sector. So the countries that I'm addressing today, you could end up asking yourself, within our own countries, do we have a king or a similar code of corporate governance where we can include this agenda? And that becomes key, because it's not just about reporting, it's also about the governance, because the governance sets the scene on what the organizations needs to use to create value and report down the line. So that's my point number one, just wanted to share with you. The second is, should it be mandated, mandatory, or legislated, and which companies should adopt both sustainability and the integrated report? And in here, in South Africa, again, happened in the King 2, as I portrayed sustainability report, the JSE, the listing requirements, required all the companies, around 400 of them, to under their listing requirements to prepare a sustainability report. And in 2004, to continue to promote sustainability reporting, they established what's called JSE Social Responsible Investing Index. So it's a way of showing which companies were reflecting on this. And all along, when the King 3 came on board, it also became a listing requirement, and some elements were also included in company law. So the mandating of sustainability and integrated reporting in South Africa is more of the listing requirement, and that has driven the agenda a lot in South Africa, and ended up then focusing more on the listed companies. And there have been a lot of lessons learned by the listed companies applying this reform. Obviously, the state-owned enterprises, majority of them are also preparing, they start sustainability, but in South Africa shifted to integrated report. And for those who may not be aware, there is a financial in one room. The sustainability is focusing on environmental, social, and governance aspect, but an integrated report is to integrate the two. So you tell a story of how a company is creating value. So it's not just the listed company, but the SOEs and municipal entities. Some also are preparing these types of reports within the country. And there's a lot of lessons that Dimitri and colleagues at South African has registered from this experience. And that's lesson number 2. The third was, which standards or frameworks should be applicable? I said the stock exchange required sustainability reporting. And in both 2002, it was clear there needed to be a framework in which the listed companies need to use to prepare this sustainability report. And by then, GRI, Global Reporting Initiative, had issued guidelines. It was established in 1997, and it was easy for South Africa companies then to adopt the GRI guidelines to start preparing sustainability report. And over the period, obviously, they've been making reference to other frameworks, especially to improve on the climate-related aspects along the way, and that's been ongoing. So in 2010, the listing requirements required integrated report. It was another requirement. What framework should the companies in South Africa implement? And in this case, there was obviously in 2013, the International Integrated Reporting Council issued what's called International Integrated Reporting Framework. And that's a framework which South African listed companies and all other companies that prepare an integrated report have been using to date. They've been using that to prepare that integrated report. And I guess through my previous colleagues have been talking about sustainability report, there's going to be the IFRS Foundation having an international, one framework for sustainability reporting. I think that will help a lot on that house on having a consistent comparable standards for sustainability reporting, and then financial, and I'm sure there are still needs for the integration. So which standards become important? And again, you are starting the journey now, or those who may be starting the journey now, EU maybe also be issuing there, so there will be good standards to be applying and considering. The fourth is the implementation support structure at the country level. So how did South Africa go about it? In 2010, the South African established what's called Integrated Reporting Committee of South Africa. And this was initially established by the South Africa Institute of Chartered Accountants, and later on included different multi-stakeholders in the country. And the whole aim of this structure was to promote the reform, to support the implementation, and to be engaged a lot in the influencing of the reform. And this is key because this was a new phenomenon in the country, and it's clear it needed someone to champion and to ensure it's advanced as it alludes to. And there have been a lot of lessons learned by this international IRC, Integrated Reporting Committee in South Africa, on how they have helped to promote, to advocate, to support, and the influencing of the reform. In actual sense, it's IRC which developed the first draft of International Integrated Reporting Framework, which was adopted globally. And thereafter, they have issued a lot of documents which are helping the country to implement the reform. And I've given you the website where you can look for additional information if you require and can learn out of that. And there lies in a lot of lessons. And through this IRC, they're also helping to promote universities to include integrated thinking and reporting in their curriculums or some programs to empower the young people. Also involved in what's called excellence in integrated reporting done annually. So ENY, for example, heavily involved in an annual awards on integrated report. And this is helping to promote the reform both in the public sector and the private sector. And I think that lies in a very good lesson for you listening to us at your own country. If you want to support this reform, a similar structure is what you can establish. Multi-stakeholder structure is what you can establish and try to drive this reform. So that was my fourth. And then my fifth one is at a regional level. How do we do it? So in Africa, we realize it's only South Africa which is heavily implementing this reform. So in 2017, we as a WorldBank decided to partner with what's called the Pan-African Federation of Accountants. It's a body that looks after all the accountancy profession in Africa. There are 55 professional accountancy bodies, and we established what's called Africa Integrated Reporting Council. And the whole aim of this council, again, is to promote, support implementation of sustainability reporting, integrated reporting, and integrated thinking in this region. So you are also a regional based. So instead of just focusing on a country, it's a model one can end up thinking, could we do that under the PULSA and establish similar council to drive this reform because it's going to be important. And both WAS, WorldBank and PAFA thought of some champions. So we have 8 countries who are participating. We didn't bring everyone. We just brought 8 countries who have a stock exchange, mature accountancy profession, and mature reporting. And the 2 members from each of those 8 countries I've listed there are the CEOs of the stock exchange and the CEO of the professional body. And it's been running since 2017. 3 areas of focus has been to establish similar multi-stakeholder committees at country level. We've done that well. Nigeria, Zimbabwe, Botswana have established, and there are 3 other countries almost driving the same reform. And these committees will also drive sustainability reporting as it comes on board. We're involved in many awareness and promotion events within the region and encouraging the same at the country level. And also, most importantly, is also helping with the influencing. So the IFRS Foundation issued consultation paper, IRC issues documents. So we read them and issue a document or comment on behalf of the African region. And it's something very critical as a regional level. We also hoping to be represented in these forums and in different standard settings, helping the training programs within the region because we want more champions. And this is helping a lot. So this lesson is more of how do you bring on board as a regional stakeholder. So Dimitri, those are just quickly 5 lessons. Need to integrate this as part of the corporate governance within your own countries. And this also brings in the public sector. Need to think who should they be mandatory, non-mandatory, and which companies should start applying them. Thirdly is which framework and standard should you apply. Fourth, which structure should you have in place to support the implementation at country level? And fifth, is there a need to establish a regional structure to support, promote, and influence the reform? I stop there and ready to answer any questions that you may have. And once again, thank you for the invitation.
Thank you, Patrick. Arman, we are going back to you. Let me project the presentation for you, so we avoid any technical issues. Can you hear us? Arman? Arman, can you hear us? Can you say something?
Dmitry, could you help? If we have no questions, maybe I will start.
Yes, can you start with your presentation? I will project it for you.
Dmitry, could you show? Yes, the second one, the second page.
Can you see it? Go ahead, please.
Dear expert, I want to share with information about the reform in accounting in our country. So the top indicators of the assessment of our strategic documents, I mean the strategic policy, are approximately 78% in line with the SDGs. In accordance with the assessment, which was carried out by UNDP and our Institute of Economic Research, but it's about the high level, top level of indicators. And as you know, since 2013, the initial transition to the accrual method has been carried out in our country, and within the framework, I mean the IT system, Ministry of Finance and our subsystem, collection and consolidated of financial and budget reports have been developed. And in accordance with our budget code, in 2019, the consolidated financial statement is included in the annual report of our government about the budget execution statement. Next, please. Dmitry, could you change the? Okay. Here, just briefly about the process of preparation of consolidated report on the implementation of our public budget, I mean state bodies. So here, consider the main stakeholders after the verification of our audit from our audit bodies, I mean accounting committee, government statement provide our parliament then discuss. And if we see the next slide, Dimitri, could you please help me? Slide number 4. And last year, for the first time, the accounts committee submitted qualified opinion. What was the critical points? Firstly, it's non-evaluation of long-term assets. Another part, quasi-public sector operations are not present on assets and liabilities line-by-line basis. And disparity of information systems, and inconsistency of information provided in budget and financial statement. When we try to comply budget and financial statement, we have gaps, but sometimes it's understandable, but at the same time, we have open gap questions. And this was critical for our accounting committee. And our accounting committee give for government recommendations to specify the rules for the identification and classification of organization that lead to consolidation, and to consider the possibility of revaluation of long-term assets of state institutions, land, buildings, and others. But we shouldn't forget about cost and benefits analysis here, because it's a costly process. And actually, do we need large costs for revolution when the property represented by the state does not change and there are no plans to sell it? And during the pandemic, we have a high level of costs in other areas. We shouldn't forget the process that we start the process in 2013. Now is 2020, and if this is a process shouldn't provide it, if wasn't provided in the 2013, is it right to do it right now? To improve the mechanisms for accounting for public investments when transferred to the quasi-public sector, and also the process of providing comparability of the data of the financial statement state bodies and with our register of republic property. So we have these critical points, and what we should do right now. Next, please, Dmitry. If we look at the international experience, we see that different countries have their own local IT systems. For Russia, it's one accounting, one S accounting, France Chorus, and South Korea DBrain. It's understandable that without IT system, it's difficult to prepare a consolidated financial statement for government, and then, of course, to provide performance audit. And these countries have their own experience, and if we try to compare with Kazakhstan, briefly about the certification during our joint program with the WorldBank, with the cooperation with the WorldBank, 52 employees of our ministry and other government agency were trained related to state audit and international public sector accounting standards. We need to build human capacity because for us to ensure the effective implementation of IPSAS. And next one, please. Slide number 6. After here, it's about our Kazakh reality. We have a different IT systems, current systems, once account also, and other ones, and more than 20,000 state units, budget organizations work in different platforms, and for government it's difficult to collect and gathering all data together. And from other hand, we see that high level of violations in accounting during the years, 74%, and it's understandable that we need a unified accounting information system, and it's help us in conducting electronic state audit, reducing corruption risks, and reduction the cost for software maintenance approximately by 3 times. And we need transparent accounting from the primary documentation to the consolidated financial statements, and reduction of accounting violations. This is issues. And the next one, please, slide number 7. We're working with this challenge for us. And another case please, slide number 7. And we have different IT systems, but at the same time, we have no register of investment projects with the life cycle, and our internal audit services and other audit bodies couldn't provide double check because we have different IT platforms without integration, And we see that in accordance with the law about state audit, we have unified database on state audit, but more than 80,000 audit reports have been sent to this database. But at the same time, our internal audit services and other audit bodies cannot use. And we know about SDGs, and there is no integration between these information systems. And at the same time, we have the House of Companies, the depository of financial statement, which contains about 33,000 financial accounts of public interest companies and more than 20,000 their audit reports. And if we use all of these systems together, and through the artificial intelligence and big data analysis, we can really use all kind of this information. But Ipsos, if we talk about amount allocated to public, private, and civil social partnership, we need disclosures. As consumers of Ipsos, we think that Ipsos 32 service concession arrangements does not disclose. We need more disclosures, because during the preparation of financial statement, we can also prepare the KPIs for the SDGs also. We need the bridge between the financial statement. If we use more disclosures, we can. It will be easier to prepare SDGs information for SDG also. And through the integration of all of the systems, we can. Our expected results are submission of the audited consolidated financial statements, and to prevent misstatements, which we discussed a little bit, which I showed a little bit earlier. And we can. It will be better. I mean, the forecasting process, revenue forecasting, and annual costs reduction. We see that it helps us for reduce the costs. Next slide, please.
Arman, we are running a little bit of time. Could you focus, please, on sustainability reporting, which
we
is
have
the topic
good
of this
analogy
event?
with our state procurement web system. When in single platform, IT platform, we can show all processes, business processes, from the planning of state procurement until the sign of state. Thank you. And no, this one. Thank you. And what we see? No, could you slide number 8 again? Back, please. Thank you, Dmitry. And related to total expenditures on research and development expenses, we can use, of course, financial reporting depository. I mean, House of Companies IT platform, which I showed earlier, and we think our team thinks that need amendments on paragraph 125 of Ipsos 31 for detailed disclose, because today we have only aggregated amounts. But if we work and add some components, it will be fully with SDG economic area indicators. And here we also can use, related to the taxes and other payments to the government, we can easily use the IT system of our tax authorities. Related to green investment, we can use the also IT platforms of our Astana International Financial Center and CASE, it's our stock exchange, because they are also, I am a member of audit committee of our IFC, so we see that their policy and strategy fully comply with the green investment approach and this key indicator, so we can use the information from the our stock exchange related to find and gather information about green investment, and public percentage of local procurement. We can use our public procurement IT system. But at the same time, when we are talking about environmental area, there is no IPSAS. It's widely known that there is no IPSAS about national wealth resources and their depletion, and other key and crucial points that we have no answer for the question related to the trust management agreements, because for Kazakhstan, actually, I think for another countries also, it's very important question when we have a trust management agreements, but at the same time, we don't know how we should recognize it and show it in disclosures. So another point I also want to add about the ISAR, okay, I will talk it a little bit later. This is briefly about the human capacity in CIS countries. You know that Kazakhstan, Belarus, Armenia, and Kyrgyzstan working in the single market, Eurasian market, and during the 5 years we are on ongoing process and preparing the certification system for accounting, for audit, and for accounting service. And we try to understand the requirements for these countries, for Eurasian Union countries. And I was a head of accounting board, and we are working in accordance with this, taking into account the local opportunities, and we're together creating the certification system in accounting and audit area. It's very important because human capacity is a main point for the SDG and for process of preparation account IPSAS financial statement in accordance with IPSAS. And just additional materials which help us. Of course, it's manual, training manual. I'm very happy to see here Tatiana because we're working together in the ISAR working group, and we use this. It's core indicators for us. It's not only just training manual, it's our template for when we try to find the solution for different kind of questions. And of course, the accounting, as you know, that UK experience in the last slide, if Dimitri come back and show us last slide, you can see the annual reports of the accounting committee of UK. And what for our team is very valuable, that they show and integrate SDGs indicators for their strategic plan, and from year to year they show all results. For us, it's very good experience, and it's even all of us need inspiration. For me, it's a big step to show commitment to SDG when high-level authorities like accounting committee show us in their strategic plan, and other government bodies and even private sector also. It's good experience to
Arman,
stick and to commitment to the SDGs. So
Arman,
we need the bridge. If we are add some points to IPSAS, we can do great job for preparing. It will be more easily to prepare statement in accordance with the SDG if we create the bridge between the methodology. And of course, without IT systems, we cannot do anything. So right now, we need a strong methodology, strong bridge between the main stakeholders, and it helps us really. And if you have questions, I'm ready to discuss with you. Thank you.
Thank you, Arman. We have to move on. We are running a little bit out of time. Thank you, Arman. Patrick, now I would like to invite Svetlana Klemenko to take lead over the coordination of the next session and introduce our special guest. Svetlana, the floor is yours.
Yeah, thank you very much, Dmitry. So the objective of our next panel is to unpack this rather complex and novel definition of sustainability reporting and to understand what has been happening in this realm over the last few months. What do we see coming next, and also trying to make the connection between what has been happening in the area of corporate reporting with the government reporting. And there is some echo, so I will ask please everybody to mute while I am speaking. Thank you. Yeah. So we will have three members of the panel. We will start conversation with Tatiana Krylova, who represents UNCTAD, and Tatiana for a number of years has been leading the work focused on definition of the set of universal core indicators, allowing to assess at the macro level, at the country level, performance of the private sector vis-a-vis SDGs. And this information is supposed to be used by the government to inform their policies. After Tatiana, we will hear from Lee White, who represents the IFRS Foundation, which is now at the center of the conversations focused on the corporate sustainability reporting. And we also will hear from Jan McIntosh, who will reflect on these developments from the corporate reporting dialogue perspective. So Tatiana, over to you, please.
Thank you, Svetlana, and I would like to ask Dmitry to help me with the presentation, because for some reason my function on sharing screen does not work. Dmitry, could you please help me?
Yes, sure. Give me a second.
Yeah, and meanwhile, I would like to welcome all participants and thank organizers and Svetlana to get UNCTAD invited to this important discussion. Thank you, Jan. Thank you. Yes, thank you, Dmitry. Yes, can we go to the second slide? Yes, thank you. So again, the theme, we already heard it. So we talk about recent trends in sustainability reporting and impact on public sector accounting and reporting. So first, just very quickly, for the sake of time, I would not go into all the details, but I will highlight some particular aspects with regard to the recent trends in sustainability reporting. And one key trend is that sustainability reporting recently really became a mainstream trend, not maybe practices yet, but definitely trend in recent years. And another trend is wide recognition of its importance of sustainability reporting for markets and external users of this information to facilitate informed decision-making by investors and other stakeholders. But also, on the other hand, recognition of its role for internal control systems and management practices of entities. Also, understanding of the role it plays in monitoring of the achievement of Sustainable Development Goals, 2030 Agenda, and particular on the indicator 1261 on number of companies publishing sustainability reports, and I will give a little bit details later. And also, of course, the trend, very visible, that the COVID-19 pandemic has significantly heightened the focus on sustainability issues. Next slide, please. Next slide, please. Yes, so these trends, they were really happening over the last years, but there are also more recent trends that actually we can observe within, maybe 3, 4, 6 months, starting in the fall of 2020, which is the acknowledgement that there is a need to foster efforts and cooperation in all initiatives towards single, coherent, and robust set of standards on sustainability reporting that would provide consistent and comparable data. This is, of course, in recognition that the existence of diverse sustainability reporting frameworks led to inconsistent and incomplete information. And so then the next effort here is really to look towards the single, coherent, and robust set of standards. This is really, I would say, a revolution in accounting area, maybe comparable to invention of dual entry, because that really leads to significant changes in the whole accounting and accounting system, which of course will affect reporting as well. Also, of course, it is recognized that whatever is done in sustainability reporting should be done in an integrated manner with financial reporting. So then the recognition of the need to facilitate the interconnectivity of integrated reporting and ensure an equal footing of financial and sustainability reporting. And of course, a great role here, basically the impetus is given by all key players in this area, almost at the same time by IOSCO, IFRS, Big Five, which were already mentioned here, that deal with sustainability reporting for many years, GRI, SASB, IRC, CDSB, and CDP, and also the European level, IFRAC and European Union. Next slide, please. Yes, so it's really great to see these developments, which UNCTAD was advocating for a long time. However, of course, to achieve the objectives of having, integrated reporting by entities, there are several challenges that need to be addressed. So some of them, key of them, are listed here. And first of all, it's lack of regulatory, institutional, and technical capacity to adapt national reporting environments to the new demands of 2030 agenda, sustainability development, and also the need to contribute to assessment of the private sector contribution towards attaining the SDGs. So then it's lack of consistency of financial information and sustainability reporting in general that already was discussed and will be addressed further, I'm sure. And also difficulties in aligning sustainability reporting with the SDG monitoring framework and its indicators. Need for better coordination at all levels. We see the strengths, but of course more would need to be done. And also with regard to the SDG monitoring framework, there is a need to develop national mechanisms on collecting data on contribution of companies into sustainable development and SDG implementation. Next slide, please. So in this regard, just to share with you some perspective of UNCTAD, referring to the first issue of lack of regulatory and institutional capacity, here we developed the accounting development tool, launched it 2012, which is a tool to identify gaps, decide on priorities, and develop action plan on reforming national accounting system and reporting system towards high quality and internationally comparable financial and sustainability reporting. It also allows countries to monitor progress over time. It is adapted to the SDG needs, and it has a specific chapter on public sector accounting. So the ADT looks at the whole infrastructure of accounting and reporting, but has specific angles related to reporting of SMEs, but also for the public sector accounting and reporting. Next slide, please. So we applied the accounting development tool since 2012 in many countries, in about 20 countries, including in countries that are present here, Kazakhstan, Russia, Belarus, Ukraine, with a view again to identify gaps and to decide on priorities on further reforms. And you see highlighted areas of sustainability reporting, environment and social reporting, which clearly see, you could clearly see that there is a huge gap in the regulatory, institutional, and technical areas on these matters. Next slide, please. So the another challenge that I mentioned is the difficulties in aligning of sustainability reporting with the SDG agenda. For UN, of course, SDG agenda is a key aspect of activities. The SDG agenda was adopted by all UN member states in 2015. So here, just to remind us about this framework of 17 goals. Next slide, please. To monitor the agenda, there is also a high-level political forum, which is a main platform to review implementation of the SDGs by member states. So they get together every July in New York to review this progress on a voluntary basis. Some countries prepare national reviews on national voluntary reviews on the SDG implementation. And there are a number of aspects also that affect the corporate reporting agenda. Next slide, please. In the slide that I just presented, you saw the goal 12 for responsible production and consumption. Within this goal, there is a specific target, 12.6, which is about encouraging companies to adopt sustainable practices and integrate sustainability information into their reporting cycle. Next slide, please. For all 17 goals and targets, there are 169 targets for the 17 goals. There are also 232 indicators to monitor implementation. And there is one particular indication, SDG 1261, I already mentioned it, which requires data on companies publishing sustainability reports, which of course requires data availability and collection mechanism at a national level. Next slide, please. So here you could see more specifically the references to this target and indicator that I just mentioned. Next slide, please. However, besides that, there is this 1261 particular indicator, many other indicators, like, for example, you could see on this slide, the use of water, use of energy, are obviously directly applicable at the company level. Next slide, please. So all this was taken on board by UNCTAD that looked at the alignment of sustainability reporting and SDG monitoring framework through the work of ISAR, which Arman already mentioned. This is the Intergovernmental Working Group of Experts on International Standards of Accounting and Reporting. It's a UN focal point in the UN system on issues of enterprise accounting and reporting. So the main mission, the main objective of the work of this group is to facilitate international harmonization and quality of enterprise reporting. And that was the agenda of ISAR since its establishment in 1982. And with adoption of a 2030 agenda in 2015, logically ISAR now is focusing on harmonization and improving quality of sustainability reporting in alignment with SDGs, to also enhance the role of reporting to assess the private sector contribution into the SDG implementation. Next slide, please. Over years, ISAR issued a number of guiding documents, including, by the way, on environmental issues, which it pioneered in 1993, right after Rio, first conference in Rio, and issued guidance also in these areas. But the more recent one, you could see the bigger picture here. Next slide, please. This is guidance on core indicators on sustainability reporting. So you could see here, the cover page of the guidance. Just wanted to say here that the indicators are in the intersection of micro and macro indicators. They're consistent with SDG monitoring framework and aligned with the needs of countries to monitor SDG implementation. They selected through intergovernmental processes and discussions on criteria to ensure that they are measurable, consistent, and comparable. And they cover areas that are common to all businesses, such as rational use of natural and material resources, social issues, for example, such as workers' safety and gender equality, and also they're applicable to the public sector, because entities in the private sector and also in public sector, they all use natural resources, and they all have to deal with social issues and ethical issues such as anti-corruption practices. Next slide, please. So I already mentioned that. I just want to say here that so then these indicators are also consistent with recommendations on the TCFD, Task Force on Climate-related Financial Disclosures, and again, include the aspects related to the use of natural resources and human resources. Next slide, please. So as such, they cover 4 areas: economic, environmental, social, and institutional. Next slide, please. And more specifically, you could see them here. Of course, it's very small, but the objective here is just to show that despite and considering, of course, the diversity of aspects on sustainability performance and sustainability reporting, it's possible to put these indicators into one page. So, and here they are, 33 indicators of the GCI, of guidance on core indicators. Next slide, please. As I already mentioned, the approach was developed through intergovernmental consultations and meetings. And also it was validated through development of almost 30 case studies in different industries and different countries, also companies of different sizes, and also companies in the private sector and in the public sector, entities rather to say, entities in the public and private sector, again, to validate this approach of the fact that there is a limited number of universal indicators that are applicable to all type of entities. So here you could see countries that participated in these case studies. Next slide, please. With full appreciation of difficulties to apply the core indicators, despite that they actually, could be seen in all businesses and applicable to business per se. So with appreciation of these difficulties, we developed training manual and training materials that are available on UNCTAD website. And also we translated the GCI guidance in all 6 UN languages, which is of course English per se, then French, Spanish, Arabic, Russian, and Chinese. Next slide, please. So then there is an aspect of other activities in the UN also working in this area. And I just wanted to highlight here that all this work is done, of course, in consultations with member states through the ISA group, but also in coordination with other UN entities in this area, including such as DESA and the initiative on GISD, Global Investor Sustainable Development Alliance, where GCI is recommended to members to be used, and further work on alignment with other frameworks, such as, first of all, World Economic Forum framework, which also looks at a limited number of core indicators, so the alignment would be facilitated. So then we, of course, work very closely with UN Global Compact, UN Statistics, UNEP, UN RISD, which was mentioned by Monica before, and also UNDP. With UN Statistics, I would like specifically to say that UN Statistics incorporated GCI as a baseline reporting for its business statistic data framework, meaning that GCI is going to be used, because it's still in development, to collect data from companies in particular areas of the GCI, such again as use of natural resources and addressing social issues. And again, as ISRA is a focal agency in the US, the focal agency in the UN on enterprise accounting and reporting, is leading this coordination and cooperation with UN entities. And we had already several meetings to progress in this coordination and cooperation. Next slide, please. So in concluding, just to summarize, what are the implications for public sector accounting and reporting? First of all, of course, it was already mentioned, the need to incorporate sustainability reporting requirements into the IFRS framework, because reporting is reporting for all. Accounting, has its foundation, which is common to different aspects of accounting and reporting. Let it be financial accounting and reporting, tax reporting, cost accounting and management accounting, and then now we're talking about sustainability reporting. So then, of course, efforts are needed to build capacity in regulatory, institutional, and technical areas. As again, we discussed and looked at the accounting development tool. There is one foundation for accounting, and if there is no infrastructure, enabling infrastructure for reporting in general, it will be very difficult to achieve good sustainability reporting, in particular, same in any other area of accounting and reporting. And then, of course, need to enhance cooperation with different players, because sustainability reporting is a cross-cutting area, and it really very requires a holistic but comprehensive and systemic approach, because many different entities at national level are involved in this, such as entities dealing with SDG implementation, environment and social areas, but then also specific aspects of accounting, such as financial cost management accounting, and also statistical area. So what is really needed is to cooperate between accounting and statistics on one part, and also private public sector on the other aspect, and also cross-cutting technical aspects of environmental, social, economic, and governance aspects of accounting and reporting infrastructure. So I'll stop here. Thank you very much again for this opportunity, and we look forward to further discussions of this novel and very challenging area. Thank you.
Thank you very much, Tatiana. This was very informative. And now we go to Lee White. So Lee, if in your remarks, if you could please focus on where IFRS Foundation now stands, what do you plan to do next? And also, how do you see the corporate reporting agenda being connected to the government reporting agenda? Thank you.
Thank you very much, Svetlana. And if I could ask for my slides to be put up. I'm going to move through these not in a sequential, so if people have copies of these, they're more there to assist you with some background and context. Dimitri, if we could go to slide 6, please, first of all. And this will then build very much on what you asked about, Svetlana, and to give some context. So please let me just give a little bit of information as to where we are currently at, how we've got there, and more importantly, looking forward and the connectivity and with the public sector. So the foundation did a consultation, a paper which was open for engagement during the course of October to December of last year. There was a very significant amount of outreach that we undertook at that time, and again, very much assisted through many on this call here today for making sure that there was good understanding of that paper. We received, getting on to 600 comment letters from a really diverse range of groups and organisations, which was really pleasing. So the outreach we'd done was very much to make sure that there was a different group, not just what you might describe as the normal group that were reporting to us in terms of this consultation paper. Dimitri, if you could go on to slide 9, then thank you. Lovely. So the trustees of the foundation have met twice already during the course of 2021. The first time was in February, where they were able to give a public statement that based on the responses to the consultation paper, there was clear demand for a set of global sustainability reporting standards, and that the IFRS Foundation should play a role through the creation of a sustainability Standards Reporting Board. Next slide, thank you. Thank you, which came then to March. So the trustees met first in February, then in March. February saying we've got the demand, we've seen the demand, we're heading towards the creation of a sustainability board. And then building up to the March meeting, there was a public statement from IOSCO, which was very much supportive of the direction of the creation of the new board, and also giving a consideration to a future endorsement of that new board. And that's quite important because in the way in which the foundation, the creation of financial reporting standards happened 20 years ago, there was some similarities to that time and to what IOSCO is doing at this time. And what I might add is I believe earlier today, and you may check this on the IOSCO website, there was further information they've just currently released about their processes for future endorsement. Thank you. Next slide. Lovely. Now, this is going to be quite important, so I'll spend a little bit more time on this. So coming out of the March meeting of the trustees, the strategic direction for the new board was articulated, and it said the following, that there needed to be a continuation of investor focus with the new board, and particularly around the concept of enterprise value. And I want to be clear on this next point, that climate will be prioritised by the new board, but there will be certainly other information needs for investors in other parts of ESG that board will undertake as well. So it is not limited only to climate. That we've been encouraged very much to build on the existing frameworks that currently exist, and we've already heard reference to TCFD and the Alliance and the WEF and their work, and we are currently putting in place the mechanisms for that engagement to occur. And importantly and finally, that there is a building blocks approach to key jurisdictions that are already underway, developing up their own requirements. And so we can see an approach of comparable baseline standards being produced by the Sustainability Standards Board, and then jurisdictions where they have greater ambitions building upon those baseline standards. Next slide, thank you. Lovely, so that's where we're at today. Looking ahead then, hopefully by the end of April, we can then produce a detailed feedback statement regarding all of the responses we received to that consultation paper. We're also looking with the trustees around the proposed changes to the Constitution, which will need to be put out for consultation. So please, if there's an opportunity for those on this call today to engage with that, we would very much welcome that engagement. Continue working with our monitoring board, and ideally looking at COP26 later this year to be clearly around communication of the creation of the board and steps we've taken in order to get information already produced regarding new standards. That's the goal for us. And now Svetlana also asked me around the connectivity with the public sector. So we need to start with a couple of reflections, and I know my colleague Ian Carruthers will be on this discussion as well, so I look forward to hearing Ian's remarks. First and foremost is there's always been good connectivity between the ISB and the IPSASB when it has come to financial reporting. And whilst there's recognition that there is many common areas in that both across the private sector and the public sector, there are also important differences around what is developed up for each sector. But I think the key there is understanding the two sectors, seeing where there's alignment, and understanding where there are differences and why those differences are there. When it comes to sustainability standards, it feels for some parts of the standards, and let's take climate as an example, that that's a global issue. And I'm not sure it differentiates between private and public sector. And therefore you could see some level of connectivity clear connectivity between the work of the new Sustainability Standards Board and the public sector, perhaps through the IFRS. Then there will be other areas in that ESG reporting which might be more of a public policy nature, and those may necessarily be ones where the IFRS need to do further work than perhaps where the Sustainability Standards Board may be. But the Sustainability Standards Board has an investor focus on enterprise value, and it would seem to me that starting point is a very good foundation point for engagement with the public sector as well. So I would complete my remarks by giving a sense that perhaps in some ways there may be greater confidence for us to hold on work in sustainability reporting, aligning across both sectors, but still recognising that there may very well be differences too. Could I pass back then to you, Svetlana?
Thank you very much. This was incredibly helpful, and in the interest of time, we are running late, so we are going to have now presentation of Jan McIntosh, who is going to reflect on what he sees happening in this place from the perspective of the corporate reporting dialogue, which is a platform convened by the IRC. We will not have the second round of comments. We will go on then to Jan Karusers. So Lee, thank you very much. I'm sure that we will continue working with you. We work with you through a few different channels, but also through this one that looks on how to converge also corporate and government reporting. Thank you very much. Jan McIntosh, over to you, please.
Thank you very much. Good evening, Lee. I see you're looking well. Yeah, it's a pity that people have to listen to two Australians in a row, you know. They're going to have to get used to the accent. I was interested in Lee's presentation. Brief history on the corporate reporting dialogue. It's been in existence for 6 years. It's 8 standard setters, including the 2 major financial reporting standard setters. It's a dialogue. It doesn't make decisions. It just gets them all together talking. And I think it's partially responsible for what's going on at present, which, by the way, I firmly endorse. Just turning immediately, because this is our question really about how does the public sector fit into this? I mean, I don't know if Lee knows, but some years ago, I tried to get the ISB to take on the public sector as well, but I was tremendously unsuccessful in convincing the trustees. And, you know, we did it in Australia. We put the public sector and the private sector boards together, and that still exists. But that's another question. And I think, you know, IFRS, I'd be very interested to hear Ian Carruthers' comments. IFRS is doing a good job, and it works closely, as Lee said, with the IFRS Foundation and the IFRS standards. So that's a model that, although I tried to get it changed, is actually working quite well. On sustainability, it's a bit more interesting. Lee's emphasised the investor focus, and I understand that, and again, I agree with it. Actually, as a way forward. Although somebody at the beginning of this commentary mentioned that government bonds are a major part of the international capital markets. And, you know, so while they're public sector, they have a big part to play in the private sector. I think there may be a case for the Sustainability Standards Board, when it gets underway, to be looking at public sector things as well. I don't know that they're going to be all that different. And maybe it needs to be done in liaison with IFRS. You know, maybe IFSASB could be a part of the Sustainability Standards Board, or could have a representation, or could be an observer, or something that helps them work together. But I think there's a stronger case for the Sustainability Standards Board taking on both the public and the private sector than there is in the financial reporting realm, where things are a little bit different. So I think, Svetlana, as you said, we're running out of time, so I'll leave it there and listen with interest to Ian Carruthers.
Thank you, Svetlana. Are you there? All right, in case Svetlana has some issue, thank you very much to Lee, to Ian, to Tatiana for the extraordinary panel. We are going to continue as we are running a little bit out of time. Our next speaker is our old friend of Pulsar, Jan Karlzer. Jan, thank you for being with us, and the floor is yours. I can project the presentation for you if you want me to.
So thank you, Dimitri. It's not allowing me to share at the moment. I don't know whether that's because you've not given me permission.
Let me do that for you.
Okay. Can you see my slides?
I think so. Go ahead, please.
Have you got that?
Yes, the slides on the screen, Jan. I projected them for you.
Oh, okay. Sorry, Dimitri. Right, okay. Hang on. Let me stop sharing my screen. Are you now putting your slides up?
Yes, they're on the screen already, Jan. Go ahead.
Okay, so I can't actually see them for some reason, but anyway. If we just move to the past the title slide. I mean, firstly, just I think the reason why this is important for the public sector, the reminder that you've got those two pie charts there, more than 40% of GDP typically, and also significant employers. So this is undoubtedly an issue where the public sector is really important. But I think echoing Lee's comments, you know, it's a global issue. We're in this together. Dimitri, if you can move to the next slide, please. So you're on slide 2, which is the one titled Sustainability Reporting Existing IFSASB Literature.
Yes, correct, Dan. Jan.
Sorry, I can't see this on my screen at all, which is the problem I'm having. But anyway, so if you're on that slide, basically, I think we're in a position where actually IFSASB has already produced literature which is relevant in this space, particularly because we've recognised that what government does impacts more broadly. So we already have guidance on in the form of recommended practice guideline 3, which is on reporting service performance indicators. Now, if those service performance indicators are aligned with SDGs or moved into alignment with SDGs, there is already guidance there which will help you start to think about that. I think one of the core pieces of literature which we have, which is relevant in this space, and certainly if you're looking at it from an investor's point of view, is recommended practice guideline 1, reporting on the longer term sustainability of an entity's finances. And I'll talk about how that works in a minute. But I think, you know, if you look at a lot of the non-financial information, certainly it will have financial impacts, and those are relevant as far as those are concerned. If you look at some of the core standards which have a relevance in terms of more forward-looking data, and impacts coming through from climate in the way that is described in a lot of the literature that's already around, I think those should start to impact if you begin to think about those in the you know, public sector financial statements in the same way as in the private sector. I'm not sure if you've got the reference there, Dimitri, to the staff Q&A. We've issued this as a first step, and basically what this does is it's available from the IFRS's website, and you can see there how that guidance can fit in with the other forms, TCFD disclosures, CDSB, and so on. Now, going back to that sort of use of core financial information, if you move into the next slide, Dimitri, and you'll need to click several times to build it up. Basically, this is the model that underpins our long-term financial sustainability guidance. And what it's doing is it's saying, look, the existing balance sheet that you have, if you take the narrow previous cash flows view, that's what you tend to get in national accounts. If you then use your IFRS-based reports, then you get those two top and bottom boxes. You get the information about assets and liabilities, particularly if you look on the sort of future outflows side. A lot of the liability information is really important in terms of financial sustainability. And then to complete the model, those boxes that aren't shaded, which are essentially in government's terms future cash flows, but also future expenditures. And I think that's where you're starting to use some of the non-financial data to then feed through and evaluate the financial aspects, the impacts that governments, the costs that governments are going to incur, the impacts on future tax revenues. That's where it can be really useful, you know, if you're thinking about it from a bond investor's point of view. So if you move on to slide 5 and click a couple of times there, Dimitri, and you should have the slide there that says RPG1 projecting longer term post-COVID challenges. Dimitri, have you got that?
Yes, we are here.
Okay, so some of the key aspects in the RPG1 guidance are the fact that you're looking at projections based on current policies. Now, the idea is that you project those forward over longer timeframes, and basically, when you're looking at the impact of the sort of longer issues like climate change, like population trends, like pressures on resources, you should go longer in terms of the cash flows. And it's basically cash flows built off the existing balance sheet that you're looking at. Similar to some of the emphasis on, say, CDSB guidance already, RPG1 recommends doing sensitivity analyses so that you pick up the areas that are going to be really important, going to have a real influence on future financial sustainability. And then you look at that financial sustainability in the context of future revenues coming in, the needs and the ability to vary future levels of services, and in particular in terms of debt. And just to show you the kind of example of the future projections you can get, I've included an example on the slide of the future projections that the UK's Office of Budget Responsibility produces by projecting forward from the UK's whole of public sector, whole of government accounts balance sheet. And you can see the impact of various different scenarios projected there. All of them not looking good in the 2020 report that you have there, and I suspect that there will be even more challenges going forwards. But I think the message here is there is already guidance, and you can start to use it. You don't need, and IFRS doesn't need to get ahead of the debate that Lee has outlined so well. So if you move on to the next slide, I think this picks up some of the resonances again about the quality of information systems, and listening to the Arman's presentation about Kazakhstan. I think she was making very eloquently the need for better systems for information collection, and the fact that you want to actually integrate those. And this all, I think, comes down to progressively developing the information systems and the governance and so on that you need in order to deliver SDGs. You know, reporting won't do it for you. You need to have the systems in place and the governance in place that will get you to those targets. So if I just move then to the last slide, Dimitri, what's IPSASB going to do about this? And I think that's really where I go back to quite a lot of the reflections from Lee and from Ian, because I think in this space, we don't see that the public sector is intrinsically different. There may well be aspects of it, as we find with financial reporting, where there are particular dimensions where we should, in the public sector, be picking up and giving additional guidance. But I think the view we've got at the moment is we shouldn't be reinventing the wheel for the public sector. So we should engage in discussions around establishing the Sustainability Standards Board, that dialogue, that very active dialogue, which both Ian and Lee discussed. The reason why this is topical for us is because our current strategy as a board goes from 2019 through to 2023. We are about to add some additional projects and to go out to consultation on that shortly, and the board has taken the decision that we should engage in discussions rather than developing our own separate guidance in that space. We think there is plenty of guidance already there, and people can be using that, so we think we can do more in terms of highlighting that and promoting that, and I think that's where working with organisations like the World Bank and so on is going to be very important. We're also starting to work with the statistical community who are looking at this, and there is, helpfully, over the next couple of years, they are updating the international statistical standards framework, so that's going to be important. And then basically keeping our stakeholders informed about what's going on, and I think crucially sharing emerging experience in this landscape. So that's how we see things moving forward over the next 2 years. Clearly, it is a very dynamic landscape, and we very much, going back to my opening remarks, this is crucial for the public sector, both politically and economically, and therefore there is a need for the public sector to play its part and be seen to play its part, but not to go off in a different direction. We need to take account of what's going on and engage with that. And where there are choices that the Sustainability Standards Board faces, we believe it's important that they are aware of the public sector dimension, which might influence them going in one direction or another. So we see the importance of dialogue here rather than inventing new wheels, and emphasise to people, use the guidance that's already there to get started on this and to start thinking about it. So don't let, in the proverbial case, the best be the enemy of the good. I'll leave it with that. Thank you for helping me with the slides.
Yeah, thank you very much, Jan. We're just in time. As usual, we don't have much time left, so I would like to invite Jose and Juan Carlos to facilitate the question and answer part of the session, and then we will move on with the closing of the session.
Thanks, Dimitri, and thanks so much to all our presenters for such interesting presentations. We will start with a first question for Jan Caruthers from Maria Teresa from Paraguay regarding sustainability reporting. She thinks that sustainability reports are interesting, especially those related to natural resources, but she thinks that it's also important, the sustainability of infrastructure, supplies, medicines, human resources for the health area, especially during the pandemic. So, and of course, the reduction of taxes, it's also very important for the population. So she wants to know if in the face of these challenges, the IPSAS board is considering to write something related to this. Thank you very much.
Yeah.
Yeah.
I just accept Ian's request. He was disconnected. Ian?
Okay, can you hear me?
Yes, did you hear the question?
So, I mean, I think those are all extremely important issues. And as you say, you know, the pandemic and the pressures on government budgets have really, you know, are going to put the pressure on all of those areas, and governments are going to have to make some really difficult choices over the coming years. And that's where we think, you know, the quality of financial reporting in terms of really understanding your current position and therefore the challenges you face is a really important priority. In terms of additional guidance, I think, you know, there's a lot of different sources of information there that you talked about in that question. And personally, I think that's where we should not be setting standards on all of those individual areas. Rather, I would see that improving quality of information there will allow you then to think about those long-term financial projections, because certainly, I mean, Monica made the point very powerfully to begin with, that there are constraints on water, there are constraints on various other areas. You know, that's not something that we can provide guidance on, but we can provide guidance on the financial aspects of all of that. And I do think that constraints and issues in those areas do also have a financial impact, and that's going to be where governments face a choice, because if you spend money on repairing infrastructure, you're not going to be able to spend it on schools, or if you spend it on benefits, you haven't got available that, you know, you can't spend the money elsewhere. So I think ultimately, you know, governments are going to have to convert this, synthesize all this information into what's the calls on the public finances and what's the choices I'm going to make. And so really, rather like you have in the corporate sector, I think the CFO, you know, there has to help the CEO make those choices and be accountable for that. I think the same is true in the public sector. So should we go ahead and set separate guidance at the moment? No, I don't think so. I think what we need is actually people to use the guidance that we've already provided through recommended practice guideline 1, through our guidance on service reporting, through our guidance on financial statement discussion and analysis. Use those tools, and then let's see where that gets us over the next couple of years, and then feedback. You know, and we'll see how that fits with what's produced by the new board that Lee was talking about, and let's decide then how we move forward and what the public sector needs in addition. But I do think it's about starting now. It's about improving the quality of information and the connectivity of information across all of those areas, rather than us setting new standards at this stage.
Thanks, Ian. Yes, it makes perfect sense. I'm going to pass the floor to my colleague, Juan Carlos. Juan Carlos.
Thank you. And I don't think we have any further questions from the audience. So if I may, I could take advantage of the microphone to ask a brief question to Tatiana. First, really to congratulate all the speakers. The presentations have been amazing. This is a very interesting topic. And for Tatiana, I have a question regarding the accounting development tool. I hear with a lot of interest your presentation. So just want to confirm, I understand that tool is for the use of public and private entities, if I understood well, but I wanted to confirm that with you. And if that is the case, what do they need to do in order to apply this tool? Do they need to go through a formal process, or what are the steps in order to apply the tool? Thank you so much.
Yes, thank you, Juan. Thank you for your questions. On the first question, yes, as I said, you know, so we have accounting. The tool is really applicable for the whole, you know, entirety of accounting and reporting infrastructure. We have a special section, not, you know, embedded in the main body, because some member states were overview when we develop accounting development tool, so they were not really ready to apply this tool for the public sector. That's why we keep it separate, because other members, they wanted to have the IPSAS and public sector accounting embedded. So that's why it's, you know, it has a separate chapter, but again, it's applicable to all entities. So now in terms of steps, the ADT is available on the website, on our website of UNCTAD. Actually, it's available also in Spanish, in English, in Russian, and in French. So you can apply it as it is there, but then of course, if you would like to have our sort of support and guidance how to use it, we would be happy to do it. So then please contact us, and then we can see how we can move about it. We will be really very happy to cooperate. The result of this would be the spidergram. So then you could, in terms of visual aids, but then of course there will be understanding of gaps and priorities based on which some countries, they developed action plan on how really to address these gaps. And it's very applicable again to the public sector, and it's also applicable to the ESG reporting, because again, it's a comprehensive view of what's needed at a country level in terms of accounting and reporting infrastructure to be able to produce high quality and internationally comparable reports for these different sectors, including corporate, including SMEs, including public sector as well.
Thank you so much, Tatiana, for your comprehensive response. I don't see any other questions, so if you agree, we could return the microphone to Dimitri and Armand so that they can close the event.
Thank you, Hussein, Juan Carlos. Armand, the floor is yours for the closing remarks.
Thank you, Dimitri. Actually, this is one of the most interesting events I just joined, because there were so many broad discussion, a lot of information. I could even see like presentations, 20, 25, 30 slides. And
sorry, John, I have problems with the internet connection. Could you please repeat again if you have a question for me, because I have problems with connection.
No, Armand, this is a closing part, no problem. So this time we saw so many presentations and a lot of information which was shared, and I think this is this demonstrates that this topic is hot. There is a lot to say, and there are different approaches how to approach this agenda. And what was the topic is sustainability reporting, integrated reporting. Is it for the public sector or not? Are we going to advance the public sector? For corporations, it says clearly yes, and they are advancing it. But what about governments? But there was a point made about sovereign the bonds, about the investors, their expectations from the government, because they comply following stock exchange or other regulations. So the government cannot just stand behind and just watch on the process. In parallel, we also heard a lot about the struggle with the IPSAS. In parallel with, this is a IPSAS implementation for many countries is a real target and in many cases challenge. So how they can go in parallel and implement sustainability reporting and how they can consolidate those into one. So then here is more about also how this integrate, how we can go to the integration and how we can go to the global standards. Of course, there are different frameworks, and the question was also raised. The question is on another side, how to mobilize finance. Are we talking about public, private, development finance institutions who can help? It was very interesting to learn practical experience from two countries, South Africa, really impressive how far they went from the standalone reporting and then going into the consolidation with the series of the King reports and using GRI back in 2004, it was like 17 years ago, and now moving to the integrated one. And South Africa gives us a good example. Kazakhstan, they also demonstrated how they approach the matter from the SDG perspective and how they are struggling with the information systems and how to keep information in one place. So overall, we can see that the challenge remains to be regulatory, institutional, and technical capacity, as indicated by our speakers. The interesting point, the foundation remains the same, and as is indicated, this is accounting, which is our foundation, and we need just to try to have the same platform to generate different reports for different purposes. Of course, the expectation is clear that we need a single integrated standard as well. So we heard from the global standard setters, and it's important just to move forward with sustainability reporting and potentially standards board. So for sustainability reporting, so the overall conclusion is, yes, this is for the public sector reporting, and we need to go to that direction, and we need to explore this topic further as we proceed. Thank you very much. Dimitri, back to you.
Thank you, Arman. I would like to make a couple of final announcements. We are currently finalizing our next Pulsar knowledge product, which as agreed during our latest face-to-face event that took place in November of 2019 in Vienna, and it will be on first-time IPSAS adoption. The paper should be published on Pulsar webpage within the next few days, and later it will be translated to all official Pulsar languages. Hence, our next webinar will be mainly focused on presentation of the main findings and recommendation of the papers. Thank you again, everybody, especially our guests and presenters. Please stay safe and have a great rest of the day.